Why buying a condo in California just got riskier. Hi, if you don't know me, my name is Steve Moon, your San Jose Realtor. And in this channel, we talk about everything that's real estate and Silicon Valley lifestyle. If you're thinking about buying a condo in California, this video could save you from financial disaster. Right now, California condo owners are facing an unprecedented crisis that's making condo ownership increasingly expensive and, in many cases, potentially financially devastating. And we're not talking about things like market fluctuations or interest rates. This is about fundamental structural problems hitting California's condo market specifically, and problems that are forcing owners to pay tens of thousands in unexpected special assessments and driving up monthly fees by hundreds of dollars. So today we're going to break down 3 California specific issues that every potential condo buyer needs to be understanding. First, how California's aging condo stock combined with decades of inadequate reserve funds is creating a massive special assessment problem. Second, how California's new mandatory balcony inspection, which just passed, this law is uncovering expensive problems. And finally, why California condo insurance costs are skyrocketing faster than anywhere else in the country. So it seems California has a unique condo problem that's now reaching a breaking point. The state experimented with massive condo construction booms in the 70s, 80s, and 90s, particularly in markets like San Francisco, Los Angeles, Orange County, and San Diego. And these condos are now reaching 30 to 50 years in age, and their major building systems are starting to fail, and exactly at the wrong times. And here's what makes California different. Many of these condo developments were built quickly during the housing booms and with cost-cutting measures that are now becoming or coming back to haunt the owners. Combine that with California's unique climate challenges, from coastal salt air causing corrosions to wildfire smoke damaging HVAC systems, seismic activities affecting structural integrity. And you combine all of that and you have buildings that are aging faster and requiring more expensive repairs than had originally been anticipated. The biggest problem is that California condo associations have been notoriously underfunded when it comes to reserve funds. A recent data shows that 71% of HOA board members and community managers plan to increase fees in 2024, with the majority of them citing the need to build up reserves that should have been funded perhaps decades ago. California's new reality hits hard with this new balcony law, SB 326, where associations could no longer waive or reduce reserve funds requirements. This means that California HOAs that have been operating on minimum budgets now face mandatory funding requirements based on professional reserve studies. So here's what this could look like in practice. A typical California condo complex built in '85 now needs a new roof, HVAC system needs to be replaced, plumbing updates, and exterior building repairs. All of this at the same time. The total cost could be something like $2 million for a 100-unit building, but the association only has $200,000 in reserves. That means an $18,000 special assessment per unit that each owner must pay within 30 to 60 days. So California's high construction costs makes this even worse. The roof replacement that might cost $200,000 in other states could easily cost double that in California due to higher labor costs, stricter building codes, and permit requirements. Plus, California's environmental regulations often require upgrades to current standards and not just, like-for-like replacements. The deferred maintenance problem is particularly acute in California because many associations chose to do patch-up work rather than address the root cause of the problem. So California's year-round mild weather allowed associations to delay things like roof replacement and exterior maintenance much longer than they could have in much harsher climates. But now, water damage from those patch roofs and walls have created structural problems that cost exponentially more money to fix. And California is unique in having some of the strictest balcony inspection requirements in the country now, and these laws are now exposing that the true extent of the state's condo maintenance crisis is happening. Senate Bill 326 was passed after a deadly balcony collapse in Berkeley where a bunch of college kids died, making California a leader in mandatory structural inspections. And here's what California's condo owners face now. The deadline for initial inspection was extended to now January of 2026. But after that, inspections must be completed every 6 to 9 years, depending on the building type. And this applies to all condos with exterior elevated elements built before 2019. So if you have a balcony, you're affected. Early inspections resulted in California revealing problems that directly trace back to the state's construction boom periods and subsequent deferred maintenance issues. So professional inspectors are finding extensive dry rot in coastal properties due to marine layer moisture issues, structural compromises from seismic activity that was never properly addressed, and widespread corrosion from California's unique environmental conditions. And one of California's inspection companies reported that 70% of all the balconies that they had inspected required some level of repair, with about 25% of them requiring immediate safety intervention. And when inspectors find immediate safety threats, they must report these to local authorities, and California building departments are taking these reports seriously, often requiring buildings to restrict access to balconies until these repairs are completely corrected. The financial impact is obviously enormous because California's prevailing wage laws and strict building codes make repairs obviously much more expensive. A balcony reconstruction that may cost $15,000 per unit in other states, again, could easily cost double that per unit in California markets, especially in places like San Jose or Los Angeles. What makes this particularly challenging for California condos is that these aren't optional anymore. They're mandatory safety repairs. And when safety issues are identified, they must be fixed regardless of the association's financial situation. So this is creating a massive special assessment issue across the state, with some California condo owners facing assessments of up to $50,000 or more per unit. And the timing couldn't be worse because these mandatory inspections are happening just as associations are dealing with inadequate reserve funding and aging infrastructures, creating sort of a perfect storm of unexpected expenses that many California condo owners simply cannot afford. California HOAs have been hit particularly hard by what industry experts are calling an insurance crisis specific to California. Median HOA fees jumped 5.7% nationally in the past year, but in California, the associations are seeing increases of 20 to 50% or even more, with insurance costs being the primary driver. And here's what makes California different. The state's wildfire risks have been made many insurance companies reluctant to write policies for any California properties at all. Some associations are seeing premium increases from perhaps $300,000 to nearly $1 million annually, especially in wildfire-prone areas like Oakland Hills, Marin County, or anywhere in Southern California's wild, urban interface. But it's not just wildfire risks. California's earthquake exposure, coastal erosion issues, and the aging building problems that we discussed earlier are making condo insurance exponentially more expensive. Insurance companies are requiring proof of recent inspections, seismic retrofits, and adequate reserves before they'll even consider providing coverage. And many California HOAs are being non-renewed entirely. Insurance companies are simply declining to insure California community associations, citing huge losses from recent wildfires and potential for catastrophic earthquake damages. So this forces associations into California's surplus insurance market, where coverage is dramatically more expensive and oftentimes provide much less protection. California condo ownership is no longer the affordable alternative to single-family homes that it used to be. The combination of mandatory reserve funding, aging infrastructure, mandatory safety inspections, and the state's unique insurance challenges is creating an unpredictable expense that can exceed mortgage payments for some people. Current California condo owners are facing a rather harsh reality. Monthly HOA fees that have doubled or even tripled, special assessments for major repairs that can exceed $50,000 per unit, and the constant threat of additional assessments as California's inspection requirements reveal that more and more of these communities are having problems. For potential buyers, California condo market is now divided into two categories: buildings that have already addressed their aging infrastructure and compliance related issues, and buildings that haven't. The first category can command premiums because buyers know that they're avoiding the massive upcoming expenses. The second category may appear to be bargains, but they're often financial traps because of the uncertainty. The reality is that many California condos built during the boom years are now becoming financially unsustainable for many middle-class owners. The combination of high mortgage payments, rising HOA fees, and massive assessments is forcing sale and creating a new category of distressed property in California's condo market. If you're considering buying a condo in California, here's what you absolutely must do to protect yourself. First, understand that buying a California condo now requires that you do the same level of due diligence as buying perhaps a commercial property. Demand to see the most recent reserve study and verify that reserves are adequately funded for California's high repair costs. A reserve study that might be adequate in other states may be completely insufficient for California's construction cost and regulatory requirements. Second, review 3 years of HOA financial statements with a focus on California's specific issues. Look for things like earthquake insurance costs, wildfire mitigation expenses, and any mention of required seismic retrofit or California compliance upgrades related to balconies and such. Third, verify that all California mandated inspections have been completed and review the actual reports itself. If balcony inspections haven't been done, assume that major expenses are coming down the road and negotiate accordingly. If they have been done, make sure that all required repairs have been completed to California standards. Fourth, understand the building's insurance situation in California's unique marketplace. Has the association been non-renewed due to wildfire risk? Are they paying surplus market rates? Finally, consider whether you can afford the true cost of California's condo ownership, which may be 50 to perhaps even 100% higher than the listed HOA fees suggest once you factor likely things like likely assessments and fee increases. So what's the takeaway? California's condo market isn't dead, but it is becoming a sophisticated investment that requires deep understanding of the state's unique challenges. So the days of buying a California condo as an affordable housing alternative, those days may be over. So make sure you understand what you're really buying into before you sign on the dotted line. Thanks for watching, and remember, in California condo markets, knowledge isn't just power, it's financial survival. So there you have it. If you found this video to be useful and informative, please hit that like button and subscribe, and also hit that bell so that you will be notified of the next video. So until the next video, hope you have a good day.